Hello, everyone. So, in this video, we're going to be looking at how I use my bias generator along with my own personal trading. Okay. So, I'm going to show you guys right now in a pop-up screen or other pop-up animation. I'm going to show you an image of the bias predictions for today's London session and for today's New York session. So today's London session would be the 27th of February, 2024. All right. So if you're taking a look at, let's say, gold, okay, gold. So gold today we had the bias saying that okay, you know what? Today we want to look for shorts on gold. Okay. Now, if the bias given, let me get my thingamajig here. If the bias given was to go short, well, after 2 o'clock, I'm looking for buy side to be taken out. Okay, I'm looking for buy side to be taken out. Now, if you can see, buy side after two, buy side is essentially here, right? So that's your buy side liquidity. What is that also called? Stacked buy side, right? Price takes it out, goes into a gap, fair value gap, and then starts to sell off. So today I was in a sell over here. I closed it because I did not like this retracement, and it's playing out perfectly. So that London sell worked out because you got yourself positioned for a sell. Okay. Then, as we proceed to the New York session on gold, you will see that the New York session was neutral. Okay. The bias generator could not predict one for the New York session on gold because of the nature of price. Yeah. What did I then use to gauge whether, yes, indeed, we're going to go down or not? We're going to use the dollar index. So the dollar index prediction for today's NY session was bullish. So from 7:30 onwards, we want to see price take out stack sell side and then rally. That caused the bullish price action. And at the same time, if the dollar index is bullish, that means gold should go down. If the dollar index is bullish, that means GBP USD and both Euro USD as well should go down also. If you take a look at GBP USD, you can see from 7:30 we were dumping, took out some major sell side, then we're pumping. Okay, fine. We're done with the New York session anyway, right? Then we take a look at Euro, same thing, dumping, and then take out sell side, job is done, and price will then retrace due to order pairing conditions. Okay. Now, what about Nasdaq? So for Nasdaq, during the London session, we had a bearish bias. That means after two is here. Honestly, price take out buy side. So where's buy side? Here. What happens? Price takes it out, it gives you a sell, and then it fails. So this is one instance in which, okay, I am looking for a sell. So I need to be able to get a sell on by 6 o'clock. So if price does not dump before 6 o'clock, then it's a fail. Yeah, so today is the only day out of the last week or so that the bias generator has failed for Nasdaq or inside London, and rightfully so, because you don't trade Nasdaq during London. Yes, then some nice moves might be there, but yeah, use your lot. We got to use our head a bit, right? Now, what about the let's say, what about Euro? So for Euro, during the London session, we had a bullish bias, and for GBP USD also, we had a bullish bias. So if you take a look at Euro from 2 o'clock, there, if I want to see bullishness on Euro, yeah, if I want to see bullishness on Euro, I want to see price take out some inch of sell side. Okay, so if you're just rallying up like this, yeah, what consider this to be your opening price. So yeah, my sell side, stack sell side should be below this, right? We should see price take out stack sell side and then only go up. So looking at this, where's my stack sell side? There. Why am I not going even lower over here? Because stack sell side, and before I forget, stack sell side here also, right? Price takes out stack sell side and goes into what? A gap. So if you guys watched my turtle soup video, you will know that, okay, if we have stack sell side just above fair value gap, then price will go for the fair value gap and react. And because we also had a bullish bias, this supports our buy idea. Okay. followed by, okay, for the New York session, Euro USD bearish. So I'm looking for price to take out stack buy side after 7:30 a.m. Eastern Standard Time, right? So in this case, where's my stack buy side? Well, let's see. Is it this one? No, that's not liquidity. Unfortunately, sorry.com, that is not liquidity. Price is only dumping because the liquidity was taken here and here. Okay, this is not stack buy side. Then can we then say, okay, Sean, then what is your stack buy side? Because come on, you're saying that you missed the move because price did not take out stack buy side as per your conditions. You missed the move. Fortunately, you did. How do I reconcile that? How do I partake in the move after it has happened? Assuming we did not hit our drawn liquidity. Yeah, simple. Look for price to take out stack buy side on the way down. So as you're looking at this, yeah, can you see how we took out stack buy side here? Filled up a gap, and that produced a very minor price run. Unfortunately, it's a very, very minor price run. Okay, super minor. And then we'll just zoom in over here on the left side. Price takes out stack sell side and goes into a fair value gap. That provided this reaction. Okay, that provided this reaction. Look at GBP. We get the same story. It's essentially the same thing. But for GBP, if we understood it's bearish, then look at 7:30. There, price dumps after 7:30 without taking buy side. So I just said, okay, if you want to see price go down, if it hasn't taken buy side just after 7:30, then you want to see price take out buy side as it's moving down. Here we go. See that? High, lower high, take it out. That's your stack buy side liquidity pool. And you got a nice, so in comparison to Euro USD, you actually got a better position inside of GBP USD. Okay. Now, coming back to gold, you can see gold hit my 1 standard deviation. I took partials, of course, and now it's starting to go up. So the question is then, okay, now listen carefully. The question is, do I have to close it? Do I have to move my stop loss? Yes, I do. Okay, at least by half, because I don't want to risk anything else. Okay. Now, why am I not confident in price, wanting to run all the way down here? Because number one, Zoro did not give us a bias for gold. So we derived that bias using the dollar index bias. Okay. Now, if I am just looking at this, yeah, if I'm just looking at this, if I'm just eyeballing what price is doing, yeah, I'm just simply eyeballing what price is doing. Price is actually going to dump for the PM session. Okay. I know the calculations. I know what goes into the calculation. I'm telling you, the PM session for gold, it should go down. So we should seek further sell side delivery. And that's the only confidence factor I have. Because I know that, okay, you know what? 80 to 90% of the time, sometimes 100% of the time, my bias is correct. For this to proceed even lower. Now, will my stop loss hit before that? Maybe. Might. It might happen. Because of the nature of price over here. It's a lot of buy side. Okay. And consider this 10 o'clock. 10 o'clock is what London close. Yeah. We still need to take out liquidity again. That's why it took out liquidity and then prices dropping because our bias as derived from the dollar index was bearish, while Zoro did not give a bias for gold. So if I understood that, okay, the dollar index up, gold should go down. So gold should take out buy side. For London close, gold should take out buy side. And from there, we should see lower prices. Now, if you want to use, for instance, this price action from this low to this high, like that, 1, 2 standard deviations, you can. Why? Because this actually led to a manipulative run higher. Actually, yeah. This actually led to a manipulative run higher. But the question is, how am I going to be really confident in, taking another sell or rather keeping this sell open? Simple. Use SMT divergence. Because SMT, I know, I think I read something on Twitter. Some guy was like, no, I only need to look at one chart, blah, blah, blah. I don't want to complicate it. Everyone and their opinions. I mean, you can say, Sean, you also. You are correct. You are correct. All right. So, but I would not discount SMT divergence. Okay. I would not discount it. I don't use it a lot, but I would not discount it. I will only use it to confirm whether, okay, you know what, my sell is good or not. Or I will also use it to confirm whether my entry is going to stay at that point or not. And what I mean by that is ensure that I did indeed catch the high or I did indeed catch the low, right? So if I'm looking at this here, now can you see how we are reaching into this gap? That also took out some stack buy side here. Yeah, this gap and this order block as well. It should be a rejection block actually, but yeah. Here, now if I'm looking at this, if I'm comparing the highs, yeah, can you see I have a high, lower high? Dollar index is making a high and a higher high. So does that tell me that yes, Sean, you can take a sell? Yes, you know why? Because see this dollar index candle, the rejection. That's what I want to see. That's what I want to see. So if I want to take a sell, yeah, if I want to take a sell, I'll do something like this. 15 pip stop and put in 0.5% there. And another one. I think I mixed up my margin there, but okay. Okay. So go there, do that. And why would I keep my take profit there? Because it's based on a larger projection. Yeah. So always keep in mind these larger projections that you are keeping in price. Okay. You need to always understand where price is relative to the range. Okay, even this range of opportunity is still good enough, about 50 pips. Okay, so that's that. Now, take into consideration this. Now we'll keep this aside and we'll come to Nasdaq. Okay, the Nasdaq, my bias today, the as per Zoro, he said buy. Like calling he. It said buy. Buy Nasdaq. So I was in a long over here. I got stopped out. I got in a long again over here. I wasn't supposed to. I was supposed to be done with Nasdaq. But I was like, you know what, screw it. Let me take another one. Here. Okay. So I'm looking for this long. I took it. And why am I taking it? Look closely. Okay. So first of all, can you see how there is no stack liquidity here? Zero. Zero. This is just a low. This is not liquidity. This, see now, look carefully. This is liquidity. And price took it out and ran up and then came down again. And while it was going up, it formed another stack liquidity pool there. So then the question becomes, how am I going to use this information to go long? Okay, check the 15, right? Can I see anything? Down here? Yes, see this? You look at this now, this one. That is your balanced price range. It's not an inverse fair value gap, sorry.com. No, this down here, that's an inverse fair value gap. It's the balanced price range. Okay. I'm using that to go long. Why? Why with such confidence? Okay, now look closely. Look very closely, yeah. See, 1 second. Okay, see how we have a low here on US 30, and then it proceeds to form a lower low. We have a low in US 500, and it forms a higher low. Therefore, we have a low in Nasdaq, and it's going to form a higher low. So that was enough to tell me, okay, you know what? This is going to be used to go long. Okay, this is going to be used to go long. That's why I went long. That's why I went long. Okay. I did not have any SMT with this low and this low, not any SMT with this low and this low, with this low and this low. Okay. So something in this price swing should provide me support for the SMT to work out. Not in this price swing, not in this price swing. Between that low and this low. Okay. And that was liquidity. Price comes again. But can I find any liquidity that can I find any signature of price in price that tells me that this is a liquidity pool? Let me check. Let's check the 30-minute chart. Nope. 1 hour. Yes. See, look at this 1 hour down close candle. It's a propulsion block. Okay. If I put this line here, look at the propulsion block now. If price has reacted from that propulsion block, it is then classified as a reactionary point. Therefore making this stack sell side. But this by itself, if you're just looking at price and you say, okay, Sean, this is stack sell side. No, you're wrong. You need to see why, then point it out. Yeah, you're inherently right, but logically wrong. Okay, that's your stack sell side. Okay, that is your stack sell side. Simple as that. Right? So look at this projection here, 1, 2, but my take profit is based on this 1 hour projection, 1, 2 over there. Let's see if it delivers or not as per Zoro's prediction rather. Okay. And as for the PM session for today, I am looking for price to actually deliver to the upside as well. So this long should be fine being kept open for the full delivery of the NY session and the PM session for higher prices. Okay, that's because Zoro said buy, therefore we buy. Right? Okay, so let's check the dollar index. Dollar index, we knew that the bias is bullish. Takes our stacks side here, is going up. But look at 10 o'clock here, 10 o'clock. Yeah. Did price take out stacks side after 10 o'clock? No. So price is coming down, especially for stacks side. So can we say that this is stacks side? Yes. So how do I then reconcile that? Okay, you know what? This is what we need to go higher. Check this volume imbalance here. 1 hour chart, we have a fair value gap here. So either way, that should be enough to cause the dollar index to rally. Boom shakalaka. And as for Nasdaq, I just gave you the analysis for that. A lot of liquidity as well. I just hope it doesn't hit me at stop loss or something go up. But that's a rejection block here. Gold, yeah, see, this is it. So that's why I think SMT divergence is actually really, really, really important for you to at least have some confidence into saying that, yes, I did catch the high. Yes, I did catch the low, right? So I'm going to actually keep my mouth shut for a bit, watch this trade pan out at 1 standard deviation right there. We take some partials from this 0.09 position and let the rest run to take profit. And all right, guys. So the target for this video, just to prove a point, was this sell liquidity pool. So I'm just going to close one position. And I'm just going to let the rest run because I'm still looking for some bearish delivery, as I said, the S&P divergence and all of that. And Zoro saying that we are going to be bearish for the PM session. So that would essentially mean after 12 o'clock. So here, we need to engineer buy side, take out buy side, and then dump. Maybe it'll be up over here. Maybe it'll be this one. Maybe it'll be this one. Don't know until price actually prints a bit and prints liquidity, right? So that's it. We can also look at Nasdaq. I think Nasdaq's not going to hold because it's being a bit too choppy. So there might be a PM session entry. AM session was utter trash. So yeah. All right. So with that said, I have one more one-on-one position opened up for March 2024. And if you want to get the bias prediction 14-day free trial, be sure to join the link down below. But that's it. Good luck and good trading. Bye-bye.